Welcome to the latest episode of our podcast series for financial advisors. Today's episode is Having Fun Again, how a former Northwestern mutual advisor designed a $7.5 billion firm around cultural and philosophical alignment. It's a conversation with Michael Dolberg, founding partner and CEO of Apollon Wealth Management. I'm Mindy Diamond, and this is the Diamond Podcast for financial advisors. This podcast is designed for advisors like you who are interested in learning more about the evolving wealth management industry through candid dialogue with breakaway advisors, those from the C-suite, and industry thought leaders. It's available on our website, diamond-consultants.com, as well as Apple Podcasts and other major podcast platforms. So be sure to subscribe and share it with your colleagues. At Diamond Consultants, our mission is to help advisors live their best business life. We want every elite advisor to find exactly the right place for their business and their clients to thrive, whether it's at a wirehouse, a regional, boutique, or independent firm. As the industry's leading recruiters and consultants, we've transitioned more than $250 billion in assets under management in the past decade. And each year, 25% of transitioning advisors who manage $1 billion or more are our clients. Curious about where, why, and how advisors like you are moving? Download the latest Advisor Transition Report to learn more, including intel on recruiting deals and our insight and analysis on the latest trends in the wealth management space. You'll find it at diamond-consultants.com/transition report. Or if you'd like to talk, feel free to give us a call at 908-879-1002. Culture is an overused word in our industry. Many firms contend that their culture is hands down the best, yet only a select few consistently demonstrate it. For wirehouse advisors, culture has become somewhat of a homogenized product. As the firms got bigger, cultural and philosophical tenets were redesigned in a more bureaucratic fashion. That is, what works best for the masses. Yet as more advisors launch independent firms, they're doing so with a different mindset, one that's more focused on developing a culture that is attractive to other like-minded advisors. For Mike Dolberg, finding the right team that shares the same ideals is a critical part of designing a firm poised for longevity and growth. In his eyes, having fun and loving what you do as an advisor are the real keys to success. And that means that sometimes making a change is necessary to get to that point of career nirvana. Mike's own wealth management career journey started in insurance in 2004. First for a short stint at New York Life, and later that same year at Northwestern Mutual. It was at the latter that he and partner Rob Gorman learned the planning business from the ground up, cold calling their way towards success. Within a year at Northwestern Mutual, Mike became a managing director of their local region, growing the business and developing strong client relationships. And it was their attention to serving their clients' needs that really shined. But Northwestern is an insurance company first. So naturally, the team eventually felt limited in what they could deliver to their clients. And they wanted the autonomy to build and grow the business their way, based on their own culture and philosophies, not driven by the firms. Mike was essentially an enterprise builder in a captive environment, and it wasn't as much fun anymore. So in 2018, they launched independent firm Apollon Wealth Management, which managed approximately $120 million at inception. Today, Apollon is a $7.5 billion firm with multiple locations across the country and separate business units. And they've got a passionate team who loves what they do. In this episode, Mike shares his amazing story with my partner, Louis Diamond. They discuss the key things that contributed to Apollon's growth, the services they can now provide to their clients, the value of capital partners, the real role of culture, life as a CEO, and ultimately why good shouldn't be good enough, plus much more. It's a great story, so let's get to it.
Mike, thank you so much for spending time with us today.
Yeah, it's great to be here. Thanks for having me.
To set the table, can you walk us through your background and what led you to enter the industry in the first place?
Sure. So I'm originally from Westport, Connecticut. I'm the youngest of three boys. My parents were divorced, and so I lived in a single parent household with my mother. My two older brothers had already gone off to college, moved away, and my mother, I think, was going to have a panic attack with the idea of me moving somewhere really far away. So she convinced me at least to stay on the East Coast. I moved down to Columbia, South Carolina, where I went to school. And one summer, me and one of my fraternity brothers decided we were going to go to Charleston for 4th of July weekend. And we just had this crazy idea that we were going to move to Charleston. And I don't know if you're familiar with the city, but it is a really big hospitality and tourism town. And so we thought it would be a good idea for us to potentially try and start up a restaurant. But the problem was neither one of us had any restaurant experience. And so at the time, Johnson & Wales had a satellite location here in Charleston. And oddly enough, I went there to study culinary. And after about 2 years of being a chef and then a sous chef in some of the more famous restaurants in Charleston, like I was 23 years old, I was working every single weekend, every single holiday. I was well over 100 hours a week, and I was getting burned out. And I had a family friend who was a very successful insurance agent up in Connecticut. And he called me up and he said, Mike, I talked to your dad and he let me know that how hard you're working. I got to be honest with you, with your background from school, I really think you should give the insurance business a try. If you're willing to work as hard as you're working in the restaurant business, like the sky is the limit. And that was it. He had introduced me to the general agent at the time at New York Life in Charleston. And I was there for about 6 months, got some great training. And then 6 months later, I just decided that going to Northwestern Mutual is going to be a little bit better fit for me for a bunch of different reasons, which we can certainly talk about. But the rest is history. It's not your typical transition from school to some CPA firm, then into the RA space for sure.
Yeah, everyone has their unique path. And I'm sure there's things you learn, let alone the work ethic that you picked up as a chef working in restaurants that probably made you who you are today. So I think everyone's path leads them to where they're supposed to be.
Yeah, absolutely. I can agree more with that.
So we'll talk about your time at Northwestern, but just to give our audience some perspective, can you talk about your current firm, Apollon Wealth Management, and some of the metrics behind the business, AUM, number of employees, anything that will just give us a viewpoint into what you've built so far?
Yeah, sure. Me and actually one of my best friends from right out of college, Rob Gorman, started a company called Apollon Holdings back in February 15th, 2018. And so Apollon Holdings actually owns two different RIAs. One is called Apollon Wealth Management, which is our traditional fee-only RIA. And then we have another one called Apollon Financial, which is an LPL hybrid firm. And then separately, we have a third company called Advisor Insurance Solutions, which is exactly what it sounds like. It is an insurance agency designed for independent investment advisors, other RIAs, and then we also are in some broker-dealer channels to help advisors come up with good insurance solutions for their clients. And as of today, we have about $7.5 billion between the two RAs of AUM and AUA. We've got 3 people, 74 of those are advisors, and the rest are just our central team, compliance, billing, trading, investment ops, our financial planning team. We all work together, both from a central and a local advisor office at all 3 of those different companies.
I mean, first, that's an amazing amount of success you've accomplished. And I love the different business lines. Can you talk a little bit about the rationale to having 3 different entities rather than having one or just focusing on one company?
Yeah. So when we first started, and I don't mean to bounce around a little bit, but when we first started this company, our mission the day we started is still exactly what it is today, which is to enrich the lives of others through collaborative financial planning and engagement. And so we wanted to make sure that we create a holistic financial planning firm that would deliver multifamily office style solutions. We wanted to make sure that we could do that with scale. And we wanted to also make sure that we could deliver really consistent client experience. regardless of whether or not somebody was in Charleston, which is where we're headquartered, or any of our other 30 plus locations across the country, comparable experience. And because of that, most of our conversations with clients kick off with a more of a comprehensive financial plan or business consulting agreement. And when we're doing that, inevitably, there is a need to address the risk management piece. Given our background coming out of Northwestern Mutual, which my partner Rob and I both were there before starting this RIA, it was a really natural fit for us to just create a standalone insurance agency that we would use and that also our internal advisors would use. We wanted to own our own agency, not because the economics are so much better. Candidly, unless you're really large, the benefit of owning your own insurance agency has nothing to do with economics and more around just access to the information, and you're not necessarily being given information based off of whatever the brokerage general agency that you use needs to sell in order for them to hit bonuses or something like that. So we wanted to make sure that we had the true independent setup on the insurance side of things. And then Apollon Wealth was our traditional fee-only RIA. We started with Schwab as our primary custodian. And as we evolved and got bigger, we had to add additional custodians like Fidelity, Pershing, Raymond James. And that's all underneath the Apollon Wealth umbrella. And for the most part, the advisors that are attracted to that side don't have much, if any, broker-dealer business. If they do, it's pretty much just trail paying annuities that they had sold a long time ago coming out of a wirehouse, or they are people that left a wirehouse or captive environment to set up their own RIA, quickly realize the highest and best use of their time is not running an RIA, but it's spending time in front of clients and prospects, and they tap out and say, all right, that's it. We just want to find a firm that is culturally and philosophically aligned with us. And so that's what we created Apollon Wealth for. As time progressed, I started to get introduced to some really great teams that were not that traditional fee-only setup. They had more of that hybrid book of business where they still had clients that liked working with buying individual fixed income for a commission, or they did have more commissionable business. And this should come as no surprise, but if we wanted to set up a hybrid RIA, LPL is the largest, I think, independent BD out there, and they certainly have a lot of reach in the IBD space and in the hybrid space. So it was just a natural fit for us to set that up. We wanted to keep those things separate, though, Apollon Wealth versus Apollon Financial, because LPL has their own set of ways of doing things. And obviously, when you have your RIA that's governed, regulated by the SEC, but a BD with FINRA, those two things combined we don't want FINRA governing what we do at our fee-only RIA. As time evolved, we just felt like there was a need that we could serve and fill for advisors, but we needed to do that in the hybrid space. In 2022, I think it was October of 2022, we spun up Apollon Financial and got that affiliation with LPL.
Got it. Very interesting. I love how you just roll with the times and you see an opportunity and you try to meet it. I mean, to me, that's the mark of most of the best advisors and entrepreneurs that we've interviewed on the show, is not being so rigid in one plan that you can't divert or recast the business, but figuring out what either the target client needs, or in your case, the target client and also prospective financial advisors need to be successful, and then making moves to make it happen. So I appreciate all that perspective. Let's rewind quite a bit and talk about your time at Northwestern Mutual. So I know you joined Northwestern in 2004 after being at New York Life for a little bit. What was it like to start your career in the insurance world? I know it was your entry into professional services, but what was it like just building an insurance practice from the ground up?
I know a lot of people that I talk to are like, I don't want anything to do with insurance and whatnot, but I truly think that some of the best advisors that I've ever met have come out of a captive insurance background, not for any particular reason other than they have to learn to prospect, which is one of the hardest things about building a successful financial services clientele. Is you have to be okay with getting comfortable being uncomfortable and being told no all the time and saying, sounds great, I'll call you in a few months and see if your thoughts change. And then in addition to that, selling insurance is really hard. You have to really dig deep and get a sense of what somebody cares about, what they're concerned about, and just the fact-finding approach that you have to take to uncover the insurance need and to help find the dollars to pay for it. I mean, I feel like that was such an invaluable experience to us. Going to Northwestern Mutual for me and for my partner, Rob, we didn't know what a blessing it was at the time. And then we were just two 24-year-old kids trying to figure out what we were going to do with our lives and trying to figure out if we were going to actually make it and be able to pay our bills. And Northwestern Mutual had just such a great training program. I don't mean to bounce around a little bit, but there's a former general agent at Northwestern Mutual called Al Graham. He designed this thing called the one card system. And that was the playbook. Like, we didn't have to figure out how to build a financial services clientele. They gave us this book. We read it. We lived it. And we're like, got it. I just have to call 40 people a day. And if I called 40 people a day, 10 of them will answer, and some of them will give us appointments, and some of those appointments will cancel, and some of them will keep. And the ones that keep, we got to ask people for referrals every single time. And like, if you just embrace that philosophy, it's hard not to build a book of business. And so, given that I have never worked at like a Merrill Lynch or UBS, I'm not quite sure what the path there looks like to start from scratch and build a clientele, but Northwestern Mutual definitely gave us the tools and resources that we needed to learn how to do that. And another thing that really kickstarted our career is we were able to work with a group of people that didn't necessarily have a huge amount of investable assets or a large net worth today, but they would, right? I would define that as like Henry's, high earners, not rich yet, or people that are just in high income producing occupations like physicians, but we had the ability to talk to them and actually have a deliverable for them when they were residents and fellows before they started to make a lot of money. And it was just easy for us to work with them, help them put together a savings plan, figure out a way to pay down their debt, make sure they had the right amount of disability insurance, and then we could work and grow with them. And so when their income went from 30,000 to 300,000, we were there. We had already established a relationship. We could do their retirement plan rollover from where they did their fellowship. We could help them set up the brokerage account. I just don't know where we would have been able to get that same kind of experience. We're very appreciative that was our background. And we definitely have some advisors that have a similar background. And we also now have a bunch of them that like have no insurance experience whatsoever. And so I think the fact that we just have a bunch of different people within the organization that come from different companies and diverse backgrounds of like how they started in this career, there's a really healthy partnership across our advisor network that helps us deliver a lot more services to our existing people because we just have different advisors with different skill sets to serve the many needs that individual clients and businesses have.
Thank you for sharing that. And yeah, I mean, it seems like the ideal place to get started. I love what you said about the one card system. Obviously, it's still daunting to make that many calls and you still need a lot of luck, a lot of hard work, but at least having a proven process that if you work the process, it should lead to results is helpful. You're not flying blind. There's thousands and thousands of advisors and agents at Northwestern and Mass Mutual and all the different captive insurance BDs that are out there, but very few reach the level of success that you did. So aside from the training they gave you, was there a tipping point in your business, or was there something or some things that you and Rob did, especially early on, that you can point to that said, this is what set us on the path that we're on today?
Honestly, I couldn't say that there was just one defining moment or one specific thing. There was just a lot of little things that helped. Rob and I have been best friends for so long. I mean, he's almost like another brother to me. And so having somebody like that is in the trenches with you, suffering with you, going through the same growing pains with you, it made it easier. On Saturday mornings, when we were 24 and 25, after going out on a Friday night, most of our peers and friend group would just sleep. And I was able to hold Rob accountable. He was able to hold me accountable. And we came in, we met each other in the office, and we would call people, right? And I just don't know if we would have been able to have that kind of discipline if we had to do it on our own. So I would say that made it really easy for us. For better or for worse, when you go into the insurance world, this was a long time ago, so maybe things have changed and maybe they pay, salaries or some like startup draw. But with us, they gave us a computer and it was like, here you go. I hope you make some sales. And we really didn't have the luxury of knowing that the next check was coming to say, well, I'll make those calls tomorrow. There was no tomorrow. We had to make the calls today. And if we didn't make the calls today, we probably couldn't bills tomorrow. And that little bit of healthy stress and pressure made it possible for us to do the things that were very uncomfortable, which was picking up the phone and calling people. And shortly after we got there, so I started in September of 2004. Rob came a couple weeks later at the end of October. And by the beginning of January, our entire office basically walked out the door to go to Mass Mutual. And it was basically me and Rob and one other guy that were left. And that was another sort of like turning point in our career. The home office people came down and essentially, I'm being a little theatric when I say this, but I mean, they essentially asked which one of us was 24, and I raised my hand because I actually was 24 at the time. And what they were really asking is, like, who has the securities license to be the principal of the office? And like, nobody, neither one of us did. And there was another guy there, and he didn't either. And Rob and the other guy had no interest. And so I just said, I'm in, I'll get it. I'll take the test. And I just self-appointed myself basically as the managing director. I took the test. They gave me the contract. I had moved all my stuff to the MD's office, and like the rest was history. So like I was just like thrust into being a new advisor, trying to figure out how to build a book of business. How do I help recruit in other advisors and teach them how to build a book of business? And it was like a total immersion into high activity and trying to figure it all out. And that was like yet another turning point. And then I would probably say the last thing for us is that at some point in our careers over there, Northwestern Mutual ran a pilot program to see if there's any merit in charging fees for financial plans. They had this company called the Estate and Business Strategies Group that was designed to charge financial planning fees for people on the estate planning side in business, closely held businesses. But they were testing out whether or not they could start charging fees for everybody else. And they hired this company out of Boston. I think they were called Legacy Companies. And so they had run a couple training classes. And when the third one came around, me and Rob got into that. And that was probably the biggest paradigm shift for us. And we just started like realizing how much deeper we could go by taking somebody through that comprehensive financial planning approach. It was also an aha moment for us that charging financial planning fees was not really there to, like, it wasn't designed necessarily for us to make a living by charging a financial planning fee. But when you get a client to pay a fee, they take the process so much more serious because they have skin in the game. And like the questions that you ask them and the leave behinds and the things that you ask them to think about in between meetings, or when you ask them for information, like they just take it a lot more serious. And so you can develop a much more intimate, deeper relationship with clients. And so for us, that was probably the most impactful and meaningful thing that happened to us in our business. And that inevitably led us to where we are today.
A lot to unpack there. First off, I love that you're just randomly appointed into this position. And it seems like, I mean, obviously you rose to the occasion. Like you probably fast-tracked your development and your skill set many years, even though it was probably very stressful and you didn't know what you were doing at the time. You faked it until you made it. And that led you to where you are. So it sounds like with the addition of charging financial planning fees, is it the correct assumption that your business suddenly became more tilted toward investments and planning than from insurance? Because we speak with a lot of folks that are at the Northwesterns of the world who maybe they don't do much investment business. So a company like Northwestern is a great option. They're a leading life insurance company. But sometimes, and I promise it'll lead to my next question, as the business tilts more toward wealth and investment management, the needs that the practice have begin to differ because the firm invests differently into wealth management as it does into insurance. Is that a dynamic that you began to feel?
Yeah, well, no question about it. I mean, after Rob and I went through that program, we started to get a lot of other people in our office to go through that same program. Almost every single person in our organization at the time had their CHFC. Most of the advisors were CF. The typical insurance approach would be from a securities licensing standpoint, get your 6 and 63. And we started to advocate and mandate that people got their 7 and 66. And we were just taking people through the planning process. And as we started to do that more and more, Rob and some of the other advisors in the office, and by the way, while I was at Northwestern, because I was the managing director, only about 15% of my time was spent doing client interaction. The rest was doing all the other stuff that is required of recruiting in advisors, doing the training, helping make sure that the office doesn't burn to the ground metaphorically and stuff like that. But so like we just had some great advisors that were taking people through a really comprehensive planning process. They started to get great reputation in town, winning like the best financial planning planners award in Charleston. We started to develop some great centers of influence from the CPA side, from the tax attorney side. And what we discovered at that point, and this inevitably is why we left to start our own RIA, was yes, definitively to your question. When we started doing planning, that led us to have a greater focus on the investment management side of things because people wanted to do all of the stuff with us, not just pay us for a plan and then we could help them with their insurance need. And then they'd still have to go do something with their Merrill Lynch advisor because they're relying on us to help them with the asset location stuff. And we were essentially just like sending off instructions to some other advisor. They wanted to move stuff with over to us. But as time progressed and we started to get referred upstream by CPAs and attorneys, it became harder and harder for us to really deliver the multifamily office style services and solutions that some of the wealthy and ultra wealthy clients that or prospects that we were being referred to. It was hard for us to have a good deliverable for them. Not that there was anything wrong with Northwestern or any other company like that, but Northwestern, Mass Mutual, New York Life, a lot of these companies out there, they are an insurance company first and they have great products. But from the investment management standpoint, I mean, there are some things that in public and private markets and public markets doing direct indexing for tax alpha and all sorts of stuff, and we just couldn't do that. We didn't have that. And that is, we wanted to make sure that if we were going to run the business the way that we were running it, work with the people that we wanted to work with, like we just had to go to an environment that was conducive for us to have the deliverables that marketplace needed. And so that's what sort of made us decide to make the leap and have a leap of faith, and just yet another time where we trusted that we'd be able to figure it out. And so far, so good.
I'd say so. So other than not being able to meet the client needs the way that you thought that they needed to be served, were there any other pain points or frustrations that you can speak about?
I would say that Northwestern and a lot of these other companies out there have a lot of services and solutions. We just wanted to do things a little bit different. And we wanted to build and grow the way that we have, and we didn't want to necessarily limit ourselves to just the Charleston marketplace. And we felt like that there was a great opportunity for us to expand through bringing in other teams and other markets. And that is just not how the world that we were in was set up for. And to my understanding, it's been a lot. We left there in 2018. And so my understanding is that their service offerings have expanded a lot. But even then, with all the service offerings, the fact that as a managing director, I was confined to a geographical location and could not bring people in, I think that inevitably just that one part alone would have at some point forced me to make the decision to leave so that we could expand into other markets. Being from Connecticut, I always wanted to have a presence in the Northeast, and I just know that so many great advisors out there in all these different marketplaces. And there's a lot of great advisors in Charleston too. Don't get me wrong, but I just felt like we could have a much bigger reach and a much larger footprint. And that's why we did what we did.
Yep. And it seems like it was the right move. Ultimately, you started your own RIA in 2018. But I mean, there's, of course, different ways to skin the proverbial cat. I mean, my guess is you could have had more autonomy and not have been geographically constrained by going to another independent broker dealer. So why the RIA space? And did you consider any other alternatives before deciding to launch the Apollon RIA?
Yeah. So we considered a bunch of different stuff. And I think this is an important thing to note. Rob and I were not business partners when we were at Northwestern Mutual. We just worked really closely, and he absolutely had a lot to do with the growth and success of that office. At some point, though, I just made my own independent decision that this was not the right place for me anymore, and I needed to leave. And given that we had such a close friendship and that we had essentially grown up together in the business, I wanted to tell him, hey, I think I'm going to leave. And so I did. And his response, I'm paraphrasing a little bit, was like, I'm so glad you said that. I'm going to leave too. And so we decided that we would do our due diligence on our own and then report back to each other of what we found. And then we would probably go together, but not necessarily partner. And so we looked at other insurance agencies. We looked at independent broker dealers. I know Rob had talked to some wirehouses, and these are all great channels, right? Like, really, they are. But there was just, we wanted to do things the way that we wanted to do them, how we wanted to do them, with the people that we wanted to do them with, and have the service offerings that we wanted to have. And we felt like the only way that we could do that is if we had true autonomy, and the RIA space was essentially the only place that we could find that, right? Because you are, in essence, building your own investment firm. It's a lot of work, and it is very difficult, but extraordinarily rewarding. And I'm just very thankful that we made the decision to go. Us partnering together happened not necessarily like with our initial intention, but we found a firm out of New York called Merchant that we decided that we were going to partner with. And they were not really interested in partnering with me independently and Rob independently. They wanted us to partner with them as one firm, and working with them with Merchant, that's what inevitably led Rob and I to decide to partner together. But we had absolutely made the decision to not go the IBD route, not go to another insurance company, not go the bank or wirehouse route, but the RA space was definitely the place for us.
Yeah, I think that makes good sense. I think everyone, all else equal, would prefer to have all the autonomy they can dream of, never want to be told no, customize everything. But when the rubber meets the road, there's a big trade-off between all the work and effort it takes to build an RIA and successfully run it, especially a larger one, versus potentially accomplishing something somewhat similar on a different platform, whether it's affiliating with an RIA like yours or going to an independent broker dealer. It all starts and ends, though, with the vision. What was it that you thought that you wanted to build? What was it that clients needed? So you mentioned that the vision from the beginning, I think the client-facing vision, was about collaborative financial planning. How about the vision for the company overall? Did you have this grand vision of being a $8 billion and growing firm and having 3 different lines of business and doing all the things you have? Or did that just happen by the various steps that you took?
No, this was definitely what we had planned on from the very beginning. I mean, candidly, I thought we would be bigger than we are already. I know that we've only been around for 6 years, and a lot of firms don't necessarily get to the size that we are. And I'm thankful that we're here. I actually thought we would be a lot bigger at this point. So I just have high expectations of us and our team. And we built a great team, and that's the reason why. But our vision definitively was to make sure that we could build that multifamily office style experience with the right services and solutions at our core. We know who we're a good fit for from an advisor perspective. We know who we're a bad fit for. And people that are attracted to us want to be part of and so it's our collective firm, and we all work together. And there's this healthy interdependence of our central service so that it frees up the time and capacity for our local offices to spend more time with their clients and prospects. And that helps them with more to cross-sell those existing people, to get referred to more clients and prospects, and to have a better deliverable for their clients. And that's what we're all about. If somebody wants to run a hedge fund and they just don't want to do their own firm, they're probably a bad fit for them, right? We're a financial planning, culture. Even those people that have investment backgrounds, they still embrace that financial planning philosophy. And they may not necessarily be the ones to take the clients through it. They'll use our financial planning team to do that. But they still believe that at the core of the relationship, that's where it all starts. And I would also say, not that there is anything wrong with this, but advisors that are fiercely independent want to have their own brand, but they just don't want to run, their own compliance and technology, they probably wouldn't be happy partnering with us. There are so many choices out there today in the RA space, in the IBD space, that for us, we're trying to find people that want to be part of something as opposed to just using us for something and they do their own deal. And like with us, that's how we deliver that very consistent, deliverable client experience. We want to make sure that we're equipping our people with the right tools and resources, so there's just not something that their clients need that we cannot help them with.
Very compelling. Can you elaborate on your recruiting business model? Are advisors joining you as independent contractors who own their own business? Are you acquiring them? Do they have employment contracts? Can you elaborate a little bit on the ways that advisors can join Apollon?
Yeah, the overwhelming majority of the people that we have affiliate with us in one of 2 different ways. They are either, in this I'm about to describe, probably 15 to 20% of our teams. They have built a great business, or whether it be at a wirehouse, at an IBD, or an RIA, and they're not ready to retire, but they also don't want to work for the next 20 years. And they're looking for the right team that can help take over the client relationship. And in that scenario, we will just acquire the firm, the advisors will stay on and we'll work together. And then when the principals of that firm that had sold to us are ready to exit or dramatically reduce, it's already happened, right? I mean, they can work with who they want. They can hand off the clients that they don't want to. And if they just want to exit in totality, no problem, right? So that is, like I said, 15 to 20%. And then the other 80 to 85% of the people that sort of affiliate with us are what I would define as our partner model, where for us, it is important to align ourselves with our advisor teams, right? To make sure that we're all rowing in the same direction and that what benefits them benefits us and vice versa. And so in that scenario, what we'll typically do is that we will buy part of their book of business or their team's practice. If they're an RIA, we will buy part of it and then we'll consolidate that RIA into ours. And so they come in underneath Apollon Wealth and they're going by the Apollon brand. And then we're in it together, right? And we share in the profit. And so when they make more money and we're making more money, and so we're really aligned to help figure out ways to deliver more value to clients and how we can identify new prospects. And we spend a lot of time making sure that we can integrate our teams in, do the right data conversion so that it's like a seamless transition for people. They're not leaving anything behind. Obviously, you can't do that in all places, but if they are allowed to take their data or if they have their own RA, that makes it really easy. And yeah, I mean, that's our model. I'm happy to dig deeper in either one of those models, but those are really the types of people that we partner with.
I speak with a lot of advisors who are building an independent business for the first time, or they have a dream of doing it. And one of the pieces of advice I always give is if you're going to focus on recruiting, you want to make sure it's the right type of recruiting, because it's very difficult to a fee-for-service platform where everyone's just joining as their own brand, owns their own business. There's no real connective tissue other than some level of services. So if you're going to spend money recruiting, ideally you want to acquire businesses or acquire a stake. So I'm a big fan of what you've done because you're creating much more durable enterprise value for yourself and your partners. And it does create that extra layer of alignment. I'm sure you mentioned earlier that there's advisors who aren't a good fit for you. I'm sure you get told no more than yes, because a lot of advisors are apprehensive about selling a piece of their business because either they're in extreme growth mode or they just want to preserve the optionality. But the fact that you've been able to grow the way you have with all these different advisors, and honestly, it's a harder sell to convince someone to really take the ultimate chance on you and have you buy into their business, is a remarkable success story. I think something that any advisor or business owner can learn from, because it's building the firm the right way.
Well, you just said something that I truly believe. And I think you referenced advisors and trusting and just taking that leap of faith that like we're the right partner. Really believe that there's so many great options that are out there. A lot of times people are just focused on the wrong thing, right? I know that there's a lot of PE-backed deals that are out there and things like that. And people are so focused on the exit and they forget about the fact that most of the people that come here love being an advisor and are exceptional at being an advisor. And like their clients rely on them for a lot of stuff. And if you're not having fun along the way, like all of these grand exits that people talk about, they're not going to happen, right? Because if you have nothing of value to sell in the end, like what's the point? And also, for me, it's just, or for us, it is a cultural and philosophical fit, right? And so I think that if people focused more on that, like finding the right team and the right firm that is culturally and philosophically aligned with them, that has the right tools and resources that they need to have a better deliverable for their client, and they could be re-energized to just start having fun again and do the things that they are passionate about and offload the things that they're not, and just like work in tandem and with a good partnership to really deliver that client value. If you do that, like the rest takes care of itself. And we are very big believers in that. And I'm preaching a little bit, I'm sorry, but for us, I just feel like at some point, the numbers are what they are. Like some people offer really big checks up front or really high payouts or this grand back end. But at the end of the day, those are just numbers on a spreadsheet. And if you're not enjoying doing what you're doing and you don't have a great client deliverable, you're not going to have a lot of advisory fees and revenue to live off of, to sell at some point in the future. It's like, it is important to find the right fit.
You mentioned some of the services that you weren't able to offer at Northwestern, and I'm sure a lot of these services that hopefully you can elaborate upon are big reasons why advisors join you. So can you talk a little bit about the services that Apollon offers? I'm most interested in, let's say, some of the more unique services, especially the ones that you were restricted from offering when you were at Northwestern.
Sure. I may give a really long answer here. So if I'm going too long, just stop me.
Let's try to get the abridged version if possible.
Yeah. So it's important to know that from a firm perspective, I know I keep talking about our philosophy in embracing financial planning. We are also big believers in a few different things, like broadly speaking, that public markets are pretty efficient. And that as long as we're making sure that we're creating portfolios that are aligned with somebody's risk profile, just from a base level, that where we're going to help drive value to clients is not in trying to be expert stock pickers or finding the right mutual fund that's going to outpace the S&P 500 or something like that. It's around tracking the markets, tracking the right indexes within the given risk profile, leaning into that efficiency of markets, helping people make good choices with the money that they have coming in and out of their bank account, making sure that with their investment accounts, with us, we have a lot of advisors that use something called direct indexing, where as opposed to buying an S&P 500 ETF, you buy a basket of securities that tracks the index and allows us to tax loss harvest. And what that will do is give us the same risk return profile of the index and drive in tax alpha. We do that internally. We don't farm it out to a third-party manager. That allows us to create a lot of custom index solutions or blended benchmarks and whatnot. And so we try to track the markets, but be very tax efficient and drive an alpha from a tax perspective. On the fixed income side, we absolutely see the value in hedging the downside, trying to find things that are non-correlated, although bonds have not necessarily been moving in the inverse direction as equities markets lately. But historically, if you own the individual bond, we created the right bond ladder. If the account is large enough, people don't have to worry about inflows and outflows of mutual funds that are going to erode their yield curve. They can own their own yield curve. And then we also embrace the reality that the private markets do beat public markets. And so we have a pretty diverse offering from private credit, private equity. We don't manufacture our own stuff. We have a research team and a due diligence process to make sure that we have best in class options for different types of clients. So for accredited investors, even though a fund, private placement fund with subscription docs may be eligible for accredited investors, we have a firm policy. We're going to have those people go into interval funds, right, which are just essentially 40 Act funds that are private credit and private equity. And that's a better fit because they're more liquid than a traditional private placement. And then we have a whole bunch of different things that are available for that. And we have a pretty deep expertise on how to handle low basis positions, either through exchange funds, exchange fund replication using options and prepay forwards, using direct indexing as a tool to wean out of those low basis positions, and hedging strategies. These are things that we never could have done at our prior firm. On some of the other more nuanced things from a planning perspective, everybody, broadly speaking, knows that you got to know how much you need to save for college, and putting money into 529 plans is an effective way to do that. With us, we take it another step further. We want to help people figure out how to save on college and navigate through the process of scholarships and grants and financial aid, and how do you allocate your income in order to maximize your financial aid eligibility. And so we will take that to a whole nother level. And then we also have that wealthy, ultra wealthy family office type services where we can do through a separate entity, bill pay, reconciliation, creating those personal, financial statements for our ultra wealthy clients. And we have a whole nother division that can help on the business exit planning. We run a 338 program on the qualified plan side, where it's the highest level of the fiduciary standard on 401ks. And so there's just a lot of different things. We don't have a single advisor that uses every single one of our services, and that's okay. We don't have all of these services and solutions so that every advisor would use everything. We have advisors that work in a few different distinct markets, and we wanted to make sure that for each one of those markets, we had all of the tools and resources that you could possibly need at every level in all of those different places. And so it would be very rare for somebody to use absolutely everything that we have because they're designed for different types of clients.
That's a very impressive and extensive service offering. And I like that you took the time to give specific examples. It wasn't just we provide family office services or we provide every service a client could benefit from. Because I think a big part of folks getting educated and understanding what's possible is hearing from people like you who have walked in the footsteps before them and have seen different client needs and have built the capabilities around it. And in your case, saw what your clients needed, saw the future, and realized that while there's some great things you had at Northwestern, it wasn't going to be enough to take you to the promised land. So that was a really good list. And I think that was actually pretty succinct for what I was expecting. So I appreciate that. Let's talk a little bit more about recruiting and acquisitions. We've seen the marketplace become far more competitive to win the attention and the trust of quality financial advisors or to acquire an RIA or an independent firm. Have you experienced the same thing? And how do you think you've shaped your approach in order to either stand out versus all these different options that are out there, or maybe done something differently to still have the same level of success that you've had when you have far more folks that are gunning for the same people?
Yes, the landscape has gotten very competitive for sure. And I know I've said this a few times, but like, there are a lot of different offerings. And you have IBDs that are now getting into the practice acquisition space. And you have tons and tons of RIAs that are now private equity backed that are out there. And like, everybody has a different value proposition. For us, we're pretty direct and straightforward with people. Like as I mentioned, we know who we're a good fit for. We know who we're not a good fit for. We'll never be the highest payout. We're also never going to be the biggest check up front. And for us, that's not because we're cheap. We just want to use those dollars to invest in the right resources so that they have the most deliverables and they have the greatest chance of making the most amount of money because they can deliver a great client experience and they're not having to leave anything on the table where their clients are going to have to go to a competitor to get, right? And for us, we want to make sure that we're the biggest line on the bottom of people's tax returns as opposed to the highest possible payout. And those don't necessarily go hand in hand. It's pretty hard to provide all these different resources and pay advisors out at like 95% payouts or something like that. And for us, we find people that just want to grow and that they like us and we like them. And when it works, I would say the thing that sets us apart the most outside of the fact that we spend a lot of time working on the team and making sure that we can deliver a consistent experience and to help the advisors and the teams get integrated so that we can help support their growth and their businesses and their client needs. But we have such a good team, and I can't say that enough. A lot of firms do not invest in the right people. And I say invest in the right people, right? Bringing on our chief compliance officer, Mike Herman, who was the CCO at United Capital, and then he was at Goldman Sachs. Like, we could bring somebody in Charleston, but Mike's the best. And we wanted to have the very best person. And like Teresa Matthews Fletcher, who came over and helps run our operations, or Eric Sterner, our CIO. We have just such good people and we have invested in the right resources so that we can have a good deliverable. And I think that is actually what sets us apart. I'm obviously a little biased and proud of the people that we have, but if I'm the smartest person in the room, like we're in deep trouble. And so we just have some incredibly smart, gifted, talented people with vast industry knowledge and experience. And that's what helps these advisors and our teams be successful. And to me, that's like the most important differentiator for us is the people that make it all work so that our advisor partners can just go out there and do what they love doing.
Well said. Yeah, I mean, at the end of the day, it's really what you're delivering is on human capital. You're providing leverage to advisors that's done through people and technology and process. So if you don't have the right team where you pick your horses and pay up for the right people, you're not going to have something compelling to bring to advisors. So I think that all makes sense. Let me hit you with two more questions before we wrap up. How has your day-to-day changed since you launched the RIA? What does life look like today since you're at Northwestern? And how do you view your role as CEO changing since the firm has grown so much? I have to imagine it's more complex and there's more challenges that pop up growing a $7.5 billion firm than when you guys were 500 million or $1 billion. So two-part question, but more so just about a day in the life and how your role and your lifestyle has changed.
Yeah, well, it's changed a lot for sure. I mean, I was definitely responsible for managing the team and making sure that we had the right infrastructure on Northwestern Mutual's platform and bringing in advisors really with no industry experience and trying to help teach them how to build a financial services clientele. And that has evolved over here to finding really experienced advisors that still want to continue to grow and deliver better experience. And so that has been a big change, right? Of who we are targeting and who we want to partner with. The other part of my life that has changed actually even just since inception of the firm. We were much smaller when we first started. I think our first ADV filing after 90 days in, we filed $120 million of AUM, and now we have several $billion 6 years later. With that, there's a lot of changes. We've increased the number of locations that we have. We have increased the number of people that we have. I mentioned some names of some of our key people, but when we first started, I don't think that we would have had the capacity, the need, the systems, the processes to attract over some of those critical people that we have now. And so it's just my day-to-day it can be stressful, but I love it. It's so much more fun. And I started to lose the passion for this business when I was at Northwestern because I just wasn't having fun anymore. And I wasn't able to do the things that I loved doing. And once we started the firm and we built the infrastructure, and now I just get to go out there and find people to bring in and just go and preach our message all over the place and work with people that I love working with. I love my day to day, even though it can be extraordinarily stressful at times. I would say some of the things that I see often out there is this is the challenge about building an RIA. If you don't love building systems and processes and managing emotions and making sure that you have the right infrastructure in place, and you're doing it because you feel like you have to have your own RIA in order to have a deliverable, I would tell you that's not true, right? We do this stuff because we love thinking about how we can deliver a better client experience, how we can listen. It's sometimes messy, but we make it work. We think about how we can deliver a better experience for our advisors. And we're actively coming to work, energized, trying to do that. A lot of our advisors and some of the RIAs that have partnered with us and then now have folded into either Apollon Wealth or Apollon Financial, they just didn't want to do that anymore, or they thought that's what they wanted to, but it just wasn't for them. And that they get to do what they love doing every day, and we get to do what we love doing every day. And it's just a really healthy partnership.
Well said. A point that I wanted to hit on was you mentioned that you realized that when you're at Northwestern, that I'm paraphrasing, but the passion and the fun was no longer there. I think that's a really underestimated and overlooked part of an advisor's thinking behind whether they're in the right place. Most advisors, especially successful ones, they're making a lot of money. They typically have more than enough products on the platform. They have a nice office, whatever the rationale is. But if you're not in a place that makes you energized, that makes you the best version of yourself and lets you show up in the best way possible for your clients, then I think that's a potential problem. And even if a transition is painful and it's a lot of work, which it is, you've seen it firsthand and help facilitate them all day long, having that spark again is, I think, number one, it's just healthy to be able to find that joy again. It's also, I think, an underappreciated growth strategy that you likely will be re-energized in a new environment, and that can catapult your growth and just bring more fulfillment to your day job. It's something that I believe, but until you said it, didn't really crystallize for me. So I really appreciate that perspective, Mike.
Well, listen, I mean, this is me preaching again, so I apologize in advance. Like you, I have young children. I just want to be the best version of myself for them so that they can be proud of who I am and look up to me. That is just not who I wanted my kids seeing me be. And it just wasn't fun anymore. So finding that passion again has just been so rewarding. And a lot of it has to do with the people that we have. Because we have such great people, I can go out there and do the stuff that I love doing every day, and the other people can do the things that they love doing. Sometimes I come in and I try and help out in operations. My ops people are like, please go away, go team, go help somebody else, leave us alone. And that's okay. So they don't hurt my feelings. But that's when I know that I need to get back out on the road and go talk to more people.
And that you hired the right people.
That's exactly right. They don't need me to do their job effectively.
Last question, something we ask of every guest. Any parting words of advice for those considering change or for those who want to walk in your footsteps?
Yeah, listen, obviously we've had a lot of success and I feel like we're just starting to get going. And so I think the future is really bright for us. And I see a lot of talented people out there. And I would just say that if you're unhappy, figure out why. And if you're unhappy because of something that you want, but you can't get where you're at, like you got to make a change, right? Somehow, some way. And if you can't make the change within your firm, then you have to make a change like with where you are at and make sure that you're going to a place for the right reasons. If you want to do what we did and you love building the business and are really passionate about that and helping provide the infrastructure and support for other people to spend time with clients and prospects, building an RA is an exceptional thing to do. If you want to spend more time with clients and prospects, just find the right people that you're philosophically and culturally aligned with, and you will do great. And so, just make sure that you're doing things for the right reasons and you're really clear with yourself, what you're looking for, what you're not looking for. Do you like the people? Do you not like the people that you're about to do it with? Because once you leave, like wherever you're at and you move the money over and your ACAT client accounts over, like you're there. Like clients don't want you to leave 18 months later. So take your time. There's a lot of really good options out there.
Well said, Mike. Thank you so much for sharing your very interesting journey. I mean, starting off as a chef to running a $7.5 billion and growing RIA is not the normal path, but I really enjoyed hearing about your perspectives on how to think about change, kind of setting the vision for what you wanted to accomplish, and the unique way that Apollon is both serving clients and also looking to attract the right like-minded advisors. So this was great, and thank you again.
Yeah, well, thank you so much for having me. I really appreciate it.
Curious about where, why, and how advisors like you are moving? Download the latest Advisor Transition Report to learn more, including intel on recruiting deals and our insight and analysis on the latest trends in the wealth management space. You'll find it at diamond-consultants.com/transition report. Or if you'd like to talk, feel free to give us a call at 908-879-1002.